the next panel that we're going to have talks about many new industries. In fact, this is the rise of the metaverse in many ways powered by NFTs. That sounds like a lot of buzzwords, and we're going to decipher those with this extraordinary panel. Panelists, come on up. Let's talk. Thank you guys for coming here. Wonderful to be chatting with all of you about NFT-powered economies and the future of the metaverse. So that is a lot to unpack in just half an hour, but it's very important before we begin to do some introductions. So Jake, why don't we start with you?
Yeah, it's a pleasure to be here. Thank you so much for having me. My name is Jake Brukhman. I'm the founder and CEO of CoinFund. We are a blockchain-focused investment firm based in New York, Miami, and Boston. We've been investing in the digital asset space since 2015, so it's our 7th full year of investing. We're a pretty early investor in the NFT space. We did Dapper Labs in 2018. We're pre-seeders of Rarible. And today I've invested in a number of companies in NFT Financialization as well as Metaverse. And one other thing to say is it's kind of a passion vertical for me. I'm an NFT creator myself.
Indeed. Actually, so many people, it's worth noting, believe that Jake is the preeminent thought leader globally on NFTs. It's just worth noting. He's been investing in the overall crypto industry for a long time, but we actually do have perhaps the preeminent expert. So, Jake, thanks for being here. Please.
Yeah, always a tough act to follow, that one. So I'm Dan Keyworth. I'm the technology director for McLaren Racing, which is, you'll know us for Formula One, but we're also a larger motorsport franchise. Might be a bit strange that you've got a motorsport guy on stage here, but we've been on a journey of discovery around NFTs and how that plays to our fan economy and how we can engage our fans in a different way, especially given how that landscape has changed. I'm sure some of you have seen the Netflix documentary Drive to Survive, and that's brought in kind of a new breed of fan and people that are more digitally savvy. So there's a real opportunity there to take digital memorabilia and other things that NFTs can offer to really kind of drive our fan agenda. So yeah.
Well, God knows I would want a McLaren in the metaverse, so we should definitely talk about that.
Do that.
I'm Florent. I'm head of product at Messari. We're a crypto data aggregator. We've been around since early 2018. So our goal is really to contextualize crypto data, may it be quantitative, qualitative. We do not cover specifically NFT, but we cover basically everything that's happening on the space. We've had a recent focus on DAOs as well, so I think it could be interesting to talk about that during the panel.
Certainly, and you don't cover NFTs yet.
Yet, yeah.
That's the primary thing we're talking about.
That's the challenge when you're an aggregator. You need to cover everything. So we'll get to NFTs for sure.
Okay, excellent. So let's talk about, we've heard a lot of discussions about NFTs today, but let's talk about the financialization of NFTs. Let's just start there because it's something that we can all talk about to some extent. NFTs have value. We see people buying them. Jake, what can I do with my NFT after I've bought it? What can I do with it today?
There's relatively few things I think you can do with it. In fact, just like maybe a year ago, kind of the predominant use case for NFTs was digital art or digital collectibles. And the predominant thing that you would do with that was to put it into a digital art gallery in a metaverse. So if you guys are familiar with something like crypto voxels, or Decentraland, right? Like this is really one of the primary use cases for what to do with an NFT. But there's a couple of things to say here. While digital art, collectibles, and now in-game assets are sort of the predominant use cases that we tangibly see in the market, the addressable market of what NFTs can tokenize is really vast. Like you can imagine applying this to all kinds of digital content. You could do movies, music, fonts, stock photography, art photography. Eventually you get to physical assets and you can tokenize the deed to your house or the title of your car.
And why would I do that?
Why would you do that? Because essentially it would be the biggest IPO of all time. When you're thinking about assets like the title of your car, your house, art, these are historically like pretty illiquid assets. And what the tokenization would do is it would create secondary markets because the technology of blockchain enables highly efficient transfers, exchange, and other financialization, which we'll talk about, that just vastly increases the efficiency of this. And so these assets become liquid, and if you start to look at the addressable market of things like that, and then think about what it means for those assets to go in secondary markets, become liquid. This is a multi-trillion-dollar asset class. And there's one thing last to say here. There are things that we're tokenizing with NFTs today that we've never tokenized before. So there's a startup called Mirror.xyz, which is essentially a blogging platform where, in various ways, writers can go and tokenize their writing. And if you think about how writers in the traditional world tokenize writing, most of it isn't even monetized.
How they monetize their writing today, you're saying?
Sorry, yes, monetize their writing, exactly. Most of it is not even monetized. Like, writing tends to be a loss leader for writers to become consultants. Obviously, you can monetize it if you work at like a newspaper or a publication or something.
And I can promise you those people are getting paid less and less every year.
They're getting paid less and less every year, and they have one single business model, which is advertising. And so, when we look at Mirror.xyz, the opportunity here is to take all the people who create blog posts and put those things on secondary markets. That has never happened before.
It's pretty remarkable. I mean, look, we've seen the growth of cryptocurrencies, and at Messari, you guys are tracking all sorts of digital assets. You're getting in with these projects, learning everything about them and categorizing them. You're, in some ways, the Google for this entire industry. How have you, from your personal vantage point, seen the growth of NFTs? Is it really as valuable as we say it is?
Yeah, so I think NFTs are just like uniquely identifiable assets with like probable supply. And you can assign any types of properties to these assets. So when you think about it, as Jake said, it's really a unlimited land of kind of like innovation and value. We talk a lot about assets as in art, collectibles, like kind of real assets. But since an NFT can contain any type of properties, it could be something like skills or like a contribution to a network. So it's really
skills could be put into an NFT.
Skills could be an NFTs because the metadata, the data that is attached to your NFT, it's not immutable. It can change. It can evolve through time. So you can really dig into like different model. And even in regards to governance, that's something we've been tracking at Messari. There is now DAOs that are using NFTs as the governance asset, meaning if you have that NFT, you can vote and make decision to allocate the treasury of the DAO. I think Nouns DAO did that, Link DAO did that, and they're building a golf court in America. So it's really unlimited. It's just assets that have properties, probable supply, and that are uniquely identifiable.
So this could be almost anything, but could also be, for example, a way to go and further engage with fans. So McLaren is certainly an iconic brand. You have a racing team. You sell some of the elite cars in the world. Why did you decide to jump in here, and how do you see NFTs improving the fan experience?
Yeah, well, I think if you sort of zoom out, McLaren Racing as a brand is 60 years old in 2023. So there's this kind of long, rich legacy. And actually our fan demographic is slightly older, or has been. And now we've got a much more exciting kind of lineup. We've got Lando Norris, Daniel Ricciardo, who are two quite exciting drivers if you watch the sport. And actually that brings a much younger fandom in. So we've got to really kind of take hold of that and go, well, how do we gamify their fanship? And what is the tool that we want to use to achieve that? And we did our first release last year with the Tezos Foundation. So we released a limited collection of digital memorabilia, 22 car parts. You could build a golden NFT, which was a race car, and they can store that. But the thing we're really interested in now, and sort of looking at the different trends that are across this space, and like if you ask me the same question next month, my answer will probably be different because that's how fast the space is moving. But the one thing that I think runs through and runs true is around utility. And by owning that asset, what can we offer to the fan beyond the average fan? So if I own the golden NFT, which is a McLaren car from previous season, does that give me more exclusive rights to meeting drivers in person, virtually, certain events, giving you kind of whitelist access to other NFT products or other products that we're offering through our license and merchandising strategy? And the next bit beyond that is kind of like fan tokening as well. So how can you lock your fans into a tokenized economy where they may have 100 said token, and that means that they can go and use that across a broad range of products and services that link to the team and kind of amplify them as a fan of the brand.
So Jake, when you are exploring I'm going to call it the addressable market for NFTs, how big could this be? Legitimately, how big could this be?
Tens of trillions of dollars. I mean, like again, if we count up all digital content,
So that would be bigger than, let's call it, annual GDPs from some of the leading nations in the world. That's
yeah,
possible.
I think so. I mean, like there's obvious like addressable market there, like we can measure today, so we can measure like, streaming. We can measure movies, right? We can measure just kind of content, digital content that we already sell. There's a ton of digital content online that we don't yet sell, like blog posts, not directly to consumers, right? So like blog posts. One of my really favorite examples is fonts. Let me just spend some time here. If you are a font, like everybody uses fonts, right? If you create a website for your company, somewhere in that stack, like you're licensing a font, and you're probably licensing it from Google. As a font creator, you don't make that much. It doesn't look like a very attractive market today. But what is really interesting is that if you take fonts, you can tokenize them with NFTs. You can say, okay, you know what? If you want to buy a license this font, it's $20, you get an NFT, and that NFT represents the license. But also, you can own the font, meaning you own the stream of fees coming from these licenses. And maybe we value that at $1,000. And that can also be an NFT. What we could do is take blockchain technology, put this on a decentralized marketplace where creators of fonts can sell fonts directly to consumers of fonts and sell these licenses and sell the fonts themselves. And what that does is remove the middleman, lower the cost of transacting, and really encourages a lot more creators to create fonts. And so when fonts don't really look like that interesting a market today.
Because, I mean, if I'm a font creator, who the heck am I selling this to? There's probably 2 or 3 buyers, legitimately, but there could be millions in the future.
They're buyers that aggregate them and kind of like, sell them in like when you buy a Squarespace or something like that. And the comp there could be stock photography, right? Like there's plenty of companies that, like Shutterstock, right, that have gone public, and we have some kind of comparable models, business models of how this could work. And these are, big multi-billion-dollar businesses.
And so that's just one of many examples of how big the NFT market can be.
Yeah, so now apply that model to, music plugins, to music samples, to fonts, to icons, to any kind of design asset, to stock photos. We can sit here all day and really list digital content that we don't really sell, in this open way today.
So, Florent, how do you see NFTs interacting with the metaverse? Does the metaverse require NFTs?
I think it requires NFTs. It doesn't require only NFTs, but it requires NFTs. I think what an NFT does is that it makes the asset portable as well. So I think that was told in the previous panel, if you have like a Bored Ape, you can bring him into Sandbox and prove that you're the owner of a Bored Ape. Someone else will have a fake Bored Ape in Sandbox, but then like if you go and you don't have the certificate of ownership, like you look a little bit idiot like walking around with a Bored Ape and you don't own any Bored Ape. So I think they are very useful in the metaverse as well because they allow creators to like monetize their work in the metaverse and own their works. So let's say I buy a land and then I try selling in-game items on my land. I can sell them on the primary market, but then I can also track the royalties that happen on the secondary market on this given metaverse or on another metaverse. So yeah, I think they're very powerful, very necessary in the metaverse, but you need other kind of way to transact. So like you need either a stable currency or another kind of currency within the metaverse to like buy and sell these NFTs. So they are not, you don't only need NFTs in some ways.
Dan, so let's talk a little bit about how McLaren might use this in the future. Are you part of the team helping think about innovation in the future? Do you see a possibility of virtual races occurring in a metaverse and McLaren team participating?
Yeah, I think there's a real long list of opportunities. There's certain trends emerging. I think if you look at us as a brand, we have Formula One. We just took a majority stake in an IndyCar team, something called Extreme E as well, which is electric rallying, and also esports. So esports and gaming is actually a huge part of our business, and we were the first team to launch our own esports official team. a program called World's Fastest Gamer, and that was to prove that you didn't just need money to get into Formula One and be a good racer. It took people through a digital twin context, and actually it was a guy that sold kitchens in Amsterdam that won it, and he was as quick as our existing driver in the simulator, so that was super exciting. So we definitely want to kind of lean on that narrative because it's really strong for us. So you definitely see there's a relationship between owning a car or a livery or a skin, as you call it, for your specific car, and using that in a digital context. And esports is probably a very obvious one for us. I think just looking more broadly across sport as well, it's just any interaction you have with a sports team and anything that you take receipt of, that can ultimately be an NFT, whether that's your courtside ticket, whether it's your program, whether it's anything that you use in gaming, whether that's football.
Tickets are a perfect example of something that should be NFTs. It just makes so much sense.
Yeah.
Fraudulent tickets are already a problem, and this seems like it's low-hanging fruit if there is one. But Jake, you guys have been investing in NFT companies, NFT-related companies, middleware related to NFTs, and in the metaverse substantially. What do you think, for you, is the most exciting thing that might come out in 2022? Perhaps something that you invested in this past year. What do you think?
So to me, kind of the most interesting next step in NFTs is financialization. So what I mean by that is, we've built a lot of DeFi around fungible assets. But if you think about the world, most assets in the world are not fungible assets. They're not stocks or currencies. They're actually uniquely valued goods. They're real estate. They're collectibles, and the vast majority of assets can be represented as NFTs. And what this does is it motivates the fact that we need financial primitives, not just for fungibles, but also for non-fungibles. What might this look like? Well, it means that you could take your NFT, which is a valuable non-fungible asset, and use it as collateral for a loan. You could take maybe the tokenized deed to your house and get a home equity loan right from a decentralized protocol is another example. Folks are working on...
I mean, that's huge, by the way. The market for home equity loans, for instance, is very large.
Just the efficiency gain there.
And now anyone could conceivably be on the other side of the book using DeFi tech, right? So anyone could also be an investor in lending out through these kind of automated platforms, right?
Absolutely. And I love the idea that these assets are also available globally because it really opens up a lot of liquidity in this market and so on. But that brings me to my next point is what is the core primitive needed in NFT financialization? And that is liquidity. It's basically the ability of the market to price these goods that are traditionally considered pretty liquid. And so one really exciting investment that we've made at CoinFund and been working on for almost 2 years now is a company called Upshot, which is working on essentially reference pricing for NFTs using machine learning and an on-chain consensus mechanism called peer prediction. They're basically going to be able to provide a reference price for any NFT. It doesn't matter if it's subjectively valued art or a collectible, and eventually it could be the deed to your house. But what it will do is it'll create a cheap way of creating a price. And once that happens, we can create automated lending protocols where you just deposit your NFT, automatically get a loan. We can create non-matching marketplaces. So just like DEXs revolutionized liquidity in the fungible space, we're starting to see NFT DEXs create liquidity in the NFT space. So you could trade a CryptoKitty for a couple of CryptoPunks or whatever the exchange rate might be. And so this pricing primitive really opens up a whole suite of new finance that we can do on this asset class.
And I mean, this is enormous. If I can go and essentially create a universal pawn shop, that's what this almost sounds like. All the advantages of it without any of the scumminess. That could totally transform everything that we have sitting in our house.
Absolutely. I think,
Or every asset sitting in inventory if I'm a corporation.
There's so many crazy use cases you can think of. You're walking through a neighborhood and you really like a house and it happens to be for sale. Maybe you buy it on your phone, that minute. Or getting a home equity loan really fast from your mobile device or any number of things.
So we're talking about NFT-powered economies, and we've certainly seen, we saw in 2021, the rise in value of NFTs. They weren't worth all that much at the beginning of the year, but by the end of the year, Messari put out an extraordinary, it's important to note, report on the most important trends. What were your company's findings on the rise of NFTs?
So we've looked into a few different areas. We've seen a lot of growth in the marketplace. So I guess that's a secret for no one. But like OpenSea, a tremendous growth, Variable, a tremendous growth. Basically, every marketplace that was there during the bear market really had tremendous growth from the growth of the market, which is totally logical. We've seen historical NFTs being valued much more also during this year. So there is actually kind of archaeologist NFTs now that are going to dig into like looking what was the first profile picture NFT, what was the first metaverse kind of land NFT.
Sounds like it's one of those jobs that can exist in the sandbox, archaeologist for NFTs.
Yeah, they're really, and so those NFTs rise in price because they have kind of like historical provenance. But we've also seen kind of like NFTs have really attracted a retail audience compared to other crypto assets. I think that's something that we expected, maybe not to come as early, but we've seen that a lot of people that are buying NFTs, speculating on NFTs, are not always the same crowd that will kind of buy ETH, buy Bitcoin, buy smart contract platform assets. So it's really been attracting a lot of retail investors. So those are some of the trends we've seen. We've seen the play to earn trend as well that has exploded. A French company like Sora, I think they were created 2 years ago. Now there was like 5 billion making like soccer cards collectibles. And I guess there's some parallel with McLaren potentially there. There are funds now like Yale Guild Blackpool that are investing solely in these games and making returns on their investments. So there have been also, I think, NFTs were like this buzzword that you use, like, oh, it's an NFT. Now we're seeing really like different types of NFTs emerging. Yeah, there's all the PFP profile picture movement. So I'll take a Bored Ape, I'll put it as my profile picture on Twitter. I'll take a punk, I do the same thing. There's art, there is access token. I have this NFT, now I can participate in this experience. There's governance token, there is productive assets like lands. There's really like a wide range. And so like our job at Messari is kind of making sense of the industry, creating a domain model to classify things. And so that's why we're getting interested into NFTs, because now there's a lot of things to classify.
Indeed. Dan, do you think that NFTs are going to be even more mainstream in 22, and why?
100%. I think that people don't necessarily get when they even go in on their first NFT is the sort of communities that you can join as part of it. So that's the kind of the rich thing that exists below a project. Certainly our experience is we can see our community as not just our existing fans. 60% probably are, 40% are a mixture of new fans, people that we've attracted, and the other part are actually people that are betting on the NFT space and just spreading across every single project so they can get their slice. So, no, I think super bullish. The market is showing all the right signs that it's going in a direction where it will go more mainstream. I think some of your points around kind of normalizing blockchain as well for people, like making it super easy to go and purchase and making that super frictionless, like that is going to be the key, I think, this year to additional growth. But yeah, I think signs are strong. It's looking pretty parabolic, and yeah, I think wait and see. Ask me next year.
Well, that leads into my last question, Jake. We have you've made a lot of investments in this space. I asked the same question, David Namdar. I wanted to ask to you as well. When you are looking into making investments into NFT-related or metaverse-related companies, what criteria are you using to help determine whether or not it's a good bet or not?
That's a great question. So at CoinFund, we're primarily concerned with infrastructure. So we're doing investments in things like Rarible, which is a marketplace for NFTs. Upshot, who I mentioned, which is working on reference pricing. We've invested in a couple of projects on Solana that are doing things like a Shopify experience for NFTs. So very much in the infrastructure space. But also at CoinFund, we've seed funded and accelerated a company called Metaversal, which is a 10-person company today. They raised about $50 million in the last year to be a venture studio in the NFT space and to invest in NFTs directly. So what they're looking for are iconic brands like perhaps McLaren, right? Who are looking for NFT strategies to go to market. And on the direct NFT side, they're looking for creators that are maybe under the radar today, but are poised for enormous success, like, People or
So you're either unearthing gems or you're taking huge brands and finding ways to further monetize them. Is that correct? That's
absolutely.
your criteria, I should say.
Yeah, I think like on the studio side of Metaversal, you can think of it a little bit as a movie model, right? Because they help to create these strategies and these assets, and then they share in the royalty streams of what they earn.
Fascinating. Gentlemen, thank you so much for your insights today. Wonderful to learn about NFTs. I'll tell you what, I'm going to go and buy a few after the panel. Thanks so much, everybody.
Thank you. Cheers. Thanks, David.